In the currency quadrant today, small rally in the euro, about 30 basis points or so. It was up about 0.5% at one point, but it slowed later in the session as we started to see orders come in. It wasn't a very high volume sell-off. It wasn't a very high volume rally. It was really kind of quiet overall in the currencies. If you look at gold as a currency, that was much more active, but the euro was definitely getting some effect from the situation in Italy, which was a positive effect, and that was part of the early rally that we got this morning. Italy's bond yields, their 10-year yield specifically, but really all their yields fell to about a 2-month low. This again was a reflection of Italy's at least ability or willingness to negotiate their debt to GDP ratio down, getting pressure from the EU finance ministers, and really the agreement they signed to be in the EU in the first place to lower that debt to GDP ratio to somewhere around 2%. There's even talk of 1.9%. Again, that 10-year yield fell 6 basis points to 3.15%. That is a 2-month low on that yield, so things at least look better in the Italian situation, and that this might not affect further plans for the ECB or Mario Draghi or anyone else associated with the situation that manages the euro currency. And lastly, dollar falling a little bit today. The dollar index fell off of the sort of 2-week highs that it's been approaching and continued to fall in toward the end of the day. The U.S. yield curve is flattening again dramatically. The 2-10 spread went to 17 basis points today. That is a decade low for that particular spread. Certainly puts a lot of pressure on the Fed. We had 5 Fed speakers today, not all of them done at this point. Nobody really talking overly hawkish there. So the dollar fell, helping the euro hold a little bit of its bid today.